How cool will it be to be able to make large purchases and pay them over time, little by little, without interest? 0% interest for up to 21 months? 0% interest for 15 months? 0% interest for 15 months? But sadly, the 0% magic doesn't apply to house purchases. How sad, and sometimes even frustrating, to see so much of your money go towards interest payments every time you pay your mortgage, making it even harder to get out of debt. I mean, look at this ridiculous amount going towards interest, with each monthly payment of $1,205.72. What a pain to see that out of that money, $705.38 is going towards interest, and that only $187.37 it's going towards the pay down of your mortgage. That's my harsh reality, and I know that is yours too. So tell me, how much money do you pay in mortgage interest? And while you're typing your response in the comments, I will take this opportunity to tell you that there's a way to save money on interest, helping you pay your mortgage faster. All of this is possible thanks to 0% credit cards. Paying your mortgage with credit cards is possible. And if your bank says that you can, well, they're wrong. Sure. Paying your mortgage with a credit card requires creativity on your part, because you can't just walk up to the bank and say, hey, just charge this mortgage payment on this card. I would love for this to happen someday, but this is not the reality today. The way you will pay your mortgage with a credit card requires a few extra steps. You have to look for your credit card checks that come with 0% promotional offers. For those looking to get an idea of what these checks look like, feel free to check out this episode. After you're done with this video, of course. You grab that check and you write it out to yourself. Then you will deposit that check in the bank account you use to pay your mortgage. Give it a few days for the money to settle in your bank account, and that's it. You now have extra money to make an extra payment on your mortgage, helping you pay it off faster. For those who haven't received those 0% checks, simply call the number behind your credit card to see if your bank has any 0% offers. If that bank doesn't offer them, thank the bank and proceed to call the number of the next credit card you have until you come across one of those 0% promotional checks. When you get to the bank that offers them, just ask them to mail you some of those checks and you're good to go. And for those who do not have a 0% credit card, try applying for one. In fact, the Discover that you see on the screen is an excellent option. Now, let's move on to my favorite part. Let's see how much you can save on interest by paying with a credit card. This strategy that I am about to show you requires a lot of discipline, handling not only the money received, but also the credit card payments. So if you're not ready to implement the strategy, don't do it. Just learn from it and implement it whenever you are ready, but only when you're ready, okay? And for those who are ready, let's continue. So as you can see here on the side of the screen, this is the mortgage payoff calculator. And this is a calculator that's going to help you run the numbers and find out how much in interest you could be saving if you make that extra payment with your credit card. So now I'm going to turn a little bit on the side so I could better explain you how to use this, the logistics about the calculator, and you will have access to this. All you got to do is just to go down to the description box down below and request it. Okay. So now let's focus our attention on this spreadsheet, right? A couple of housekeeping items before we proceed with, showing you how this works. You will not be able to make changes or enter any numbers on this spreadsheet. The way you're going to use this is that once you get access to it, you have to come here where it says file, and then you're going to go down on file and make a copy for yourself, right? You have to have a Google account, meaning a Gmail account. Everybody can create one. It's free of access. And then, so you're going to go ahead and go to file, make a copy, and then you name the calculator whatever you want. And then you just save it in the folder, whatever folder you choose to save it. And then just click on make a copy, right? Once you make a copy, you will then have access to make changes to it. Okay. I actually included a note here because in the past, we have gotten thousands and thousands of requests of people asking, hey, can I get access to it? Once again, you're not going to be able to make edits. So if you want to access the file and make edits and start typing your numbers, you have to go through File, just the way I just showed you, and make a copy. If for whatever reason we keep getting requests for edits, my team has been instructed to ignore your message, because at this point we do get a lot of volume and we cannot be addressing something that has already been addressed in this video. Okay, so whenever you're in doubt, watch this video again. Now, I know that in the past a lot of you have made suggestions on how to make the spreadsheet looks prettier, whether it's by locking the cell, removing some of this coloring over here. Thank you very much for all of your suggestions. I love it. However, it does not work for us. Why? Because I've noticed that when I've removed this, the users who have been requesting this file wind up making mistakes for whatever reason, right? Maybe there's too many fields, maybe they're not sure, maybe they're nervous. So we realized that the best way to go about this is to go back to basics and just simply include all these ugly cells, as some of you might call it, the yellow and stuff like that. It's just the way it works. It has worked for us, and it has reduced the number of mistakes that the users tend to make whenever they're using this calculator. Okay, so now let's go ahead and play with this calculator. So once you're here, you're going to see a couple of fields that you definitely need to pay attention to. So one is the loan amount. That's why it says enter value here. There's the interest rate box, enter value here, and then terms, enter value here. Whatever you see in red, it says do not touch, just don't touch it, okay? And you will be playing with column E over here by entering some of the values below, okay? So that's just at a high level. So now let's get to enter some of the numbers. So in the first field, you're going to have to enter your loan amount, okay? So if we pull up the mortgage statement, I want you to make sure that the loan amount is not the same as the remaining balance, meaning the outstanding principal balance. Those two are complete different things. The loan amount is the original amount you got the mortgage for. And then the outstanding principal balance is just basically the debt that you still have with the bank, right? Whatever you have managed to pay down so far minus your original loan amount, okay? So the loan amount for this particular mortgage was $164,250, okay? $164,250. And like I said, it is not meant to be the same amount if you have been paying your mortgage for quite some time now. As you can see, Chepito has been paying down the mortgage, and the balance on the debt is now at $162,245 and 4 cents. And it's clearly not the same number as where he started. So make sure you note that, because it is a common mistake, a common message that we've been getting from our users saying, hey, I don't think your calculator is accurate because of this and that. And this is one of the many reasons why. Okay. So once you get that out of the way, let's just go ahead and find the interest rate. That's pretty straightforward for a fixed mortgage. So you have interest rate 5.55. So just come here and type in 5.55. Now, under term, this is a field where a lot of people make mistakes as well historically. So I want to make sure I clarify that, and hopefully there won't be any questions down the road. We're trying to get the monthly numbers in here, the monthly mortgage payment. So in order to do that, you're going to have to take the length of your mortgage and you're going to have to multiply that by 12, okay? So if you have a 30-year mortgage, you're going to take 30 and you're going to multiply that by 12 and you're going to wind up with 360. Why is it 360? Well, because in this case, we're talking about a 30-year mortgage. So 30 times 12 equals 360. Yes, I know this is very redundant, but I have found out that I need to keep repeating this over and over again because maybe people are getting nervous when they're using this calculator, they're getting overwhelmed. So I want to make sure that no mistakes are made and that you get the accurate calculations for your mortgage, and so that you can save, a lot of money in your mortgage payoff. So once you enter those numbers, you're going to hit enter. And as you can see here, on line 6, there's no numbers right here, right? But then once you enter the final piece of the puzzle, you will see that you're going to get a payment amount right here of $937. Now, I want to make sure you are aware that the payment amount that you see here will not be the same as your mortgage statement, because for the most part, mortgage statements also include this amount here that you see on the screen, and that's the escrow, which is taxes and insurance. And for us, it's very difficult to calculate that because taxes will change depending on your neighborhood, depending on where you bought the house. And the insurance also changes a lot depending on the individual that has bought it. It's based on the type of house that you have, how much you pay for the house, and also your FICO score. So in order to keep things simple, we decided to simplify this calculator to only do the calculation for your principal and for your interest, which at the end of the day is what really matters, because all you need to know is how much you're actually reducing in interest and how much of that money that you're paying extra is actually going towards the reduction of your principal, meaning your mortgage, right? But for those who actually want to verify the accuracy of this calculator, it's very easy for you to do that. You can actually corroborate that by cross-referencing the principal amount and then the interest. So I know for a fact that for this mortgage, for Chipito, he's been paying it for 12 months. So what we're going to do is that we're going to go on to month 12. I want to make sure you get to see it over here. So month 12 right here. So I'm just going to scroll. So month 12, $937.75 is the payment. And then over here, you're going to see that $187 is being paid towards the principal. So $187.37. So that's accurate right here. And then we have $750 over here. And on interest, we're talking about $750.38. So you just cross-check it. The numbers do match. And now let's go on to the fun part. So far, assuming you're paying the bare minimum and that you don't make any extra payments, this mortgage will cost you $173,340.93 in interest. Okay? Just in interest. That's without including how much you have to pay back to the bank. But because you learned this new trick about using 0% credit cards to pay off your mortgage faster, let's say you manage to pull money out of the credit card using those 0% checks on month 12, right? So we talk about month 12. This is what we use to verify the numbers. And let's say you got an excellent credit line and you were able to get $5,000 out of that check, right? You wrote it to yourself, you deposited it to your account, and voila, you got it. So you're going to make your usual mortgage payment. And then in addition to that, you're going to make that additional $5,000 in it. With a payment of $5,000, look at how much you're saving in interest. You're saving a total of $18,547.78, reducing the total amount of interest paid from $73,340 to $154,793. Okay, so this is an investment of $5,000 and you're saving $18,547. Now, I understand that this will require a certain level of sacrifice on your end to pay off for the credit card because now you're dealing with two debts. But the good news is that the debt that you're getting with the credit card is at 0%. So you have a certain amount of time to pay it off depending on how long the promotional offer is, and you're saving $18,000 in total with an investment of $5,000. So let's say, fast forward a couple of months, you managed to pay off that $5,000 credit card and you got another offer on month 24 right here. And you got a great credit line and you managed to pull another $5,000. So now we're talking about a $10,000 investment, right? So $5,000 in month 12 and then another $5,000 in month 24. They both add up to $10,000. And look at how much that has saved you. So you pay $10,000 extra in the principal and look at how much you end up saving, $33,565.56. The numbers speak for themselves. So look for the calculator. The link is down in the description box below. As I mentioned, this strategy requires a lot of discipline. You will have to make adjustments to your budget to pay off the credit card before the promotional offer ends. However, it is a small sacrifice to save you thousands of dollars in mortgage interest in the long term, helping you pay off that mortgage debt faster. And on top of that, you don't have to worry about interest on your credit card since you're using those funds with a promotional offer at 0%. Once again, for those interested in getting the mortgage payoff calculator, here is the link on the screen and it will also be in the description.